Good day of trade for Indian markets. We moved in line with global cues and then closed at the highest point of the day.
It was certainly a great day of trade, Nikunj, and we will be talking about what lies forth for tomorrow and how exactly you should be approaching trade. So here is the guest lineup. Nandan Chakrabarti, MD, Institutional Equity Research, joins in from Axis Capital. We've got Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services, and Varun Goyal, Head of PMS at Karvy Private Wealth. I'd like to start with you, Varun. Do you think that we clearly have the legs to now conquer 63.50 on the upside as well?
Well, we believe that the market is definitely poised upwards. I think if we go by the historical data in the last 6 general elections, markets have delivered almost 17% average returns 6 months going into the general election. So I think that's because market generally expect that the government which comes up post the elections is going to be better than the incumbent one. And we believe that this time also it's not going to be any different. The short-term triggers, of course, continue to be the earnings season. We have seen a good set of numbers, so far from whatever little have come out from the IT space. I think the challenge here, or the real sector that is going to drive the markets upward, is going to be banking. So far, whatever results have come out have, already we have seen some kind of pressures as far as the asset quality is concerned, but I think that is largely in the price. Most of the banking stocks have taken a very significant beating in the last 6 months, and I believe that almost all of it is in the price. So from this point onwards, even if the banks are able to deliver 15% kind of a profit growth, it should be taken positively by the market.
Sandeep Wagle, we are once again approaching towards 63.50, 63.60. Do you think this time around this market has enough momentum to go past that hump?
Nikunj, I think so. I think 63.50,
There's no evidence of momentum, Sandeep. I mean, I was just looking at the market breadth, market internals. They don't inspire too much of confidence.
Nikunj, from a low of 61.50 where we almost threatened to break that, and mind you, even I was feeling that we will go down to 5900, almost everybody was feeling so. The bulls have managed to defend that, and not only that, in the last 4 days from a low of 61.50 we have almost reached 63.30, almost a 180 point, 170 point up move. So another 50 points, 70 points, Nikunj, I don't think should be an issue. But yes, I would not say that it will go beyond 6400, 6500 and a one-way up move. That may not happen. We may even test 6380, 6400 for all you know, and be in the range of 6200 to 6400 for some time. I mean, I would call it a consolidation, time-wise consolidation. It may not run away, but it may not crash down also. I think 6200 has made some kind of a bottom, 6200, 6250 on the Nifty. And I think the range for the Nifty is now 6200 to 6400. Now if it breaks 6380 or it touches 6410, that hardly matters. I mean, as long as it doesn't fall and break 6200 on the downside, I think the bias is definitely on the upside.
Okay, the bias is definitely on the upside. Nandan, let's get in your view with respect to names like, Bajaj Auto, L&T, Punjab National Bank. You seem fairly bullish on these names. What's the rationale?
So as I mentioned, that's my third silo. So once you know that, maybe BJP and AAP and Congress, any two of them have come together or something like that, when you think a stable government has been formed, sorry. Then those are cases where, as I mentioned, urban discretionary is the one. Well, Bajaj is the most urban discretionary among the auto stocks. And L&T is the obvious player if the clearances start happening, then L&T is the obvious beneficiary because it's got low debt and, well, it's the only big daddy around. There's no number two there. And PNB, again, given valuations, I think as things ease, the perception of their NPAs and so on will improve, and you'll have write-backs also starting in some time. So I think those are the rationale for my swingers. That's the third silo. But don't put too much attention on swingers versus the first category. I don't think people have adequate exposure to silo 1.
Nandan, what's your view on the IT space as a whole? Are you happy to own IT irrespective of the election outcome?
So it depends on the stocks, because IT now, what are we betting on? We are betting on US growth. Now, every couple of months there is a little bit of a swing in terms of, the growth that we see in the US versus the one we see in China. But one thing is clear, that, the discretionary income and the IT budgets are getting now clearer than it was a year or two back. So obviously, IT remains my favorite. And we've had that for, last, almost couple of years.
Varun, are you getting a sense that IT is getting a crowded trade? IT historically has been a highly correlated trade. For the moment, rupee has appreciated against the dollar and IT stocks are still holding on. This madness cannot continue forever.
Well, Nikunj, my own sense is that IT is going to be this year what FMCG was for the last couple of years. I think we are going to see a very robust volume growth environment. Of course, quarter 3 is seasonally weak because of the lesser number of working days, because of the holiday season and all. But I think volume growth is definitely going to be strong for the next few quarters. We would expect around 14 to 15% kind of volume growth for the Tier 1 IT pack as a whole. And I believe that the earnings growth in this space are going to be extremely healthy. At this point of time, I would have 15 to 20% of weight of each portfolio into the IT space, and I believe that there is significant scope for multiple expansion. Going forward, this is a space which is zero debt, ROE is in excess of 25-30%, good clean management, and a good business model. So I think there is all the drivers are in place for a sustained multiple re-rating, which should continue to happen during the course of this year.
Auto as such has been in focus. Sandeep, is there anything that you like from this basket?
Well, Aman, I think it is making a bottom at around 1860, but I don't see that kind of a momentum and volume built up. So I would wait for some more evidence. I would rather buy it above 1920. But yes, if you ask me if I'm liking something, I was liking M&M today, I was liking Maruti, I was liking Hero MotoCorp. So other than Bajaj Auto, I was liking almost all the other stocks for some bit of talk of a trading upside of 4-5% in all of them.
We're identifying some of the stocks that you can keep an eye out on. Let's get off to a start with Gargi joining in from our research team to give us a lowdown as to what exactly dealing rooms are advising. Gargi.
The first stock is JSW Steel. We hear from dealers that there could be some short positions created on that counter in the next couple of trading sessions. Remember, despite PSE Metal Index being one of the top gainers in today's trading session, JSW Steel was one stock from that list that was in the red. In fact, in the last few trading sessions, we have seen metals being a bit weak, considering that the global scenario is not looking too good. Also, that the recent run-up in some of these counters, especially for a JSW Steel, a JSPL, has been tremendous. So some profit booking that we could see for these steel companies. Remember, fundamentals also have not been pretty strong. Demand for steel has been subdued. Also prices, though there has been increases of about 500 to 1,000 rupees this month, but still the offtake has not been really strong. So that's one counter, JSW Steel, where we are hearing short positions. The other one is Jet Airways, and some HNI buying is what we could witness in the next couple of trading sessions. About 3 to 4% kind of a move is what dealers are expecting in the next week or so. So it is a kind of BTST trade that dealers are suggesting for Jet Airways.
Sandeep Agle, what are your top ideas for tomorrow morning? I reckon it would be bullish because you expect markets will go up.
Nikunj, absolutely. I have both buy calls. The first one is a buy in a Century Textiles, stop loss of 308, target 330. The second one is a buy in a HDFC, stop loss of 834, target 870.
Nandan, let's talk about the financial space within this basket. Do you think it's going to be battered PSUs, which is going to be the most beneficial, or would you just pick out some stocks from the private banking space?
See, so when I say swinger, that means high risk return. So obviously PSU banks are in the high risk return category. When I say that you're going to do in silo 2, which is essentially what will move first, I would assume it will still be the private sector banks, because even though part of them have remained defensive, you see each of the private sector banks also have certain issues which are unique to each private sector bank. So I think what will happen is, because of those issues, they are not priced as well as they should be. So I think the private sector banks will still are a safer bet, and they have room to move up once there's clarity, because each of them have some issue or the other because of this instability of the current regime.
Varun, run us through the sectors where you'll be deriving comfort and which you think as a theme will outshine in 2014.
Well, I think some of the consumer-facing NBFCs should do quite well. I think those companies, especially in the private sector space, which are in the auto, consumer or mortgage finance space, should do quite well. I don't think we're going to see a very significant deterioration in asset quality. Then some of the mid-cap pharma picks look extremely attractive. We are expecting a very, very strong earning season for most of the mid-tier pharma names.
Sandeep, out of the three instruments, Nifty futures, the Bank Nifty and the IT index, which is your preferred instrument for tomorrow and for rest of the week?
I think tomorrow I would be enthused with the Bank Nifty. I'm liking that, the way it moved up, though it was a little choppy today. I think Bank Nifty, good chance that it may outperform on the upside if you talk of the next day or two. Talk of the next week or so, I would go with the IT space, IT index.
We're still looking at buying Nifty futures tomorrow, Sandeep, if we see a mild gap up?
I have a view of a 63.80. Now, probably if it opens at 63.50, 20-25 points up, I may not buy it because then the upside is hardly 20 points. But if it opens at the current level of 63.30, falls down by 10, 12, 15 points, which is very much possible, I would be keen to buy it with a 30 point stop loss a little below 6300 and play for a 70-75 point upside.
Alright, on that note, gentlemen, we'll wrap it up right here on the show. Thanks so much for taking time out and joining in with your expert opinion.